not enough money, balance, equity, margin, leverage, lot size, and the asset that you're going to be trading, cryptocurrencies or stocks indexes. Right now, looking at this aspect of for you to execute a buy and a sell using the lot size, you're going to be experiencing, or you're experiencing, such error of not enough money. Here's what you have to understand with the trading. When you're trading, first thing first, when you're trading based on what? On margin. So we are on margin trading, or we're margin trading. Okay, right now, when you're trading on margin, that simply means that we have what? We have a leverage. And a leverage, for you to understand leverage is not money that you will see on this platform, or money that they will actually give you, that you are able to see it. No. And it's not money that if you lose money here based on the margin, you're going to owe any broker money. No. The only time that you're going to owe money when you're actually trading with the broker, it's when you actually, most of the time, you are trading news trading events. For those who are new in under the topic of trading fundamentals, which is trading the news, there's another list in this channel. Please look at it. Just watch it so that you can actually get the picture and understand what are news and fundamental trading. Now, when you're trading based on what? Based on margin. So the only time you will owe money is when you're trading the news and the news didn't go well in your direction. May say you actually placed a sell, they went to a buy, or you placed a buy, they went to a sell. So meaning that the loss here that you encountered is more than the balance that is here, and then putting you on a negative equity. When the trade is closed with the stop out level, which is the margin level here of 100%, let's say the stop out level was actually around 70%, it was not triggered. The broker couldn't trigger that because the price was unavailable that was moving here. The price was not available for that moment because the market was moving too fast, and the system couldn't pick up or make sure that it closed the trade once actually losing the value of that balance here, meaning that you're going to be left with 0.000 below the account. Now, when you're looking at this aspect of not enough money, right, you're going to what? You're going to trade based on margin and what? Leverage. So leverage is the money that is going to be given to you via the broker agreement. Right now, the only time we're going to owe money is because of the broker is not giving you, or it's not offering a negative protection balance, meaning that if you're losing more money than the money that is here in the balance, then that's where the broker is going to what? Is going to charge you, meaning that you need to pay it back. So myself, I once had that experience once, not again. Now, for you to fix this issue of, or the error of not enough money, please, what you're gonna do, just add money here, balance, add more money. That's the simplest way. However, adding more money, it doesn't actually help you to understand what you are doing in terms of risking. Now, when you take a closer look here at leverage, I want to show you something that's going over here. We have a leverage, right? We have a leverage here, cryptocurrencies. Remember, when you're trading Forex, leverage is based on the brokers, how they actually want to do business with you. So in this case, they have what? Leverage of 300, or from a lot of 0.01. So the lot doesn't matter that much. All right. So the leverage is always like this. So the brokers can put preferences how they want the leverage to be, meaning that in this case, we can see here, the moment you go to 3 lot size trading under the asset of cryptocurrency, the leverage is going to automatically change to 50. So you must be very mindful of that. Same as when you're trading the Nasdaq or NAS 100. Some traders, I see them influence or trading the NAS 100. They're not aware that the leverage is sometimes close to 1 to 200. In some cases, if you're trading in the news, the leverage can be changed to 1:30. See, so these are some things that you need to take into account when you actually want to trade Forex. So you see here with stocks indexes, the lot size are like this, the leverage is like this. So the leverage can be displayed in a way that you see something like this. This is my IC market account. It's my real account, per se. Now, the leverage here is 1 to 1,000. This doesn't mean that if I want to go to trade Nasdaq, it's going to be 1 to 1,000. No, it's not going to be like that. So you need to be aware of this. Right now, once you are aware, you can easily ask the broker to actually give you such information, Or you can easily go to their website, browse it, check it out, and then once you have the leverage, now you can go back and do the calculations for yourself and be able to what? Do the calculations. And when you have to do the calculations of they're not enough money, what you're going to do, you're going to come to this asset, the asset that you have, and then you're going to tap, you're going to go to what? Properties. You're going to go to properties. Under properties, what you're looking for, we are looking for what? Here's properties, or sometimes you get what? Details. If you're using the laptop, you're going to see specifications, and under the market watch. Now, once you have the properties, you're going to see what? Here I actually click or selected the USD ZAR. What you're going to go to, you're going to go quickly to the contract size. All right, under contract size, that is very important for you to understand, and so much important so that you can understand this money that is actually needed here. Now, once you have contract size, what you're going to do is you're going to do the calculations. Okay, the calculations are going to go like this, right? Let me see if I can do the calculations with you so that you can actually get what's going on over here. Now, the calculations are going to go like this, right? We are trading what? We are trading euro, euro versus USD, right? Now, if you're trading euro USD, meaning that 1 euro, I'm putting dollar, 1 euro is equals to what? Is equals to this price over here. Do you see this price over here? This is the price that we used to sell on the chart. The price will keep changing sometimes, and if the price keep changing, will also affect the money that you need over here. All right, so now once we have what? 1.06421. Now this is the price that you're going to need. Okay, that's the price that you're going to need, whether you sell or you buy. This is the price that you're going to need. But remember, be careful that when you are trading, you're trading using bid and ask. So there are two prices that you're going to be using. So those bid and ask, they should not confuse you, because when you're buying and selling, you are buying and selling based on those actually prices. Let me see if I can actually show you these prices over here, right, so that we can be able to see and not be confused on what's going on over here. So we have two prices. You can see here with buy and we have sell. So these are the two prices that I'm talking about, and even you can see here we have two prices. All right, moving along, moving fast, and for us not to take time. All right, now once you actually have this price over here, what you're going to do, you're going to use the contract size with a contract size of 100k. In some cases you'll find contract size is 1, sometimes it's 10, sometimes it's 100, and that will also affect the lot size. And the lot size, for you to see the lot size, the aspect of you to see a lot size are here. The aspect for you to see a lot size that is actually or actually the parameters of the brokers that they actually start from lot size, it's here under the properties. You will see that we have what? We have a minimum volume here. You can see, I believe it is very clear and is transparent to you, so that you can not be confused on what's happening. You can see here we have a minimum volume of 0.01. Some they start at a higher minimum. So okay, now once you have this 100,000 or 1 contract size, you're going to times with the lot size. So meaning that in this case we have 0.01. We're trading what? Euro USD. You can see here we have a lot size there, margin of 10. Now if you times this one, you're going to get what? You're going to get 1,000. Now once you get 1,000, you're going to take this 1,000 times by the price that you're actually using to actually place a sell or buy. Now once you have times this price, you will see that maybe you are left with 1,000 times what? It's going to be, let's say 10,642.00. Right, now if it's like this is an estimation. I'm doing calculations for you so fast that you can understand what's going on over here. This is the money that was required for you to trade without leverage. Now the leverage come in play once you have what? 1:1,000. 1:1,000. So you're going to take what? The 1,000, or sometimes the leverage is going to be 100:1, meaning that per everyone that you deposit, they're going to give you this amount of money. Right, now you're going to take this money, divide by this 10,000. Then instead of having 10,000 for this position of Euro USD, you're going to need what? You're going to need only 1.064 just to open 0.01. I believe it makes sense and everybody understand what's going on over here. All right, now this is the money that you're going to need. So but needing this money is actually not enough. Why? Because you need to at least maybe have 5. So also that you protect your position not to be on a margin level or stop out, so that you can actually manage the risk, meaning that if it moves 10 points or 100 points here, so 100 points, you're going to actually blow the account in an instant. So be aware of that, be careful of that. Also subscribe, comment, follow. Love you all.